The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 5 April 2024. Well, lots going on in the gold and silver markets, as anyone that follows these markets is well aware. Gold continues to make all-time highs on a nominal basis, not on an inflation-adjusted basis. And silver is finally starting to participate and starting to close the gold-silver ratio. I'm still looking for the gold-silver ratio to be at 70 or lower to, in my view, confirm this move is for both metals. Nonetheless, I thought I'd do something a little different than talk about how great the metals are doing this week. And I thought I'd bring up a chart that I've brought up in lectures in the past. And it's kind of an interesting chart. This came out in Forbes magazine after Warren Buffett made his purchase, and it's in constant $1998. So that's important to bear in mind. So the numbers are all valid all the way through from the year 1344 to the year 1998, 1999. And what's interesting is you see this inflation-adjusted price. Warren Buffett basically bought very near the all-time low in inflation-adjusted terms. So what I like to point out here is the all-time high was in the year 1477, and it was $806 per ounce. So we've already been there on an inflation-adjusted basis. And if you'd like to readjust from a constant $1998 to today's dollars, you can go to the U.S. inflation calculator. This uses their metrics for inflation, not shadowstats.com, which will give you a much higher price. But we'll use the government's metrics. And what you can see here is if in 1998 the price was $806, then in 2024, the same item would cost $1,534.50. So the cumulative inflation is almost double. It's 90%, 90.4%. So that's rather interesting that when you hear people talk about $1,000 an ounce silver, it's actually already occurred in times gone by. Certainly what lies ahead of us remains to be determined. So there's lots of ways to look at this chart. One way is, of course, what the price movement has been in constant dollars. And you can see here from the 13th century through probably a couple hundred years, 1500, right around 400 the ounce. Of course, you want to double that in today's dollars, as I just showed you. And then you can drop down from about 1544, and you can kind of guess here and just look at that. And that'd be around a little below probably 200 an ounce for, 300, 400 years. And then you got another drop here, and then you had a constant of around, I'll say, 70, 80. And then you never saw the gold-silver ratio that I've talked about many times, and this is freehand, folks, so forgive me, but basically, you never saw it above 20 to 1. But that was when silver and gold had the same purpose, and that was money. And that's all they were, either one. Silver much more so than gold because of the price differential between the two. And the gold-silver ratio set at 16 to 1, the monetary value. So the crime 1873, you see this big spike. And from that point onward, you started to see not only the silver price come down, but you also saw less and less silver used. And this is, of course, the big silver discoveries. So we had these big Comstock lode and all that. That's partially true. I don't have time to go into all the dynamics of that, but that was a big silver discovery. That's a fact. So we really didn't end the silver standard until 1935. If you type in when did the world go off the silver standard, you will see 1935. And other countries come off at 1935. In the end, however, all countries would adopt the fiat currency system. In the United States, the gold standard was abandoned by Richard Nixon in 1975, whereas the silver standard officially came to an end when China and Hong Kong abandoned it in 1935. So there are many things that you can conclude from this, draw your own conclusions. I mean, you can conclude, as I have, that silver's highest value is when it's a monetary asset, not when it's just an industrial or monetary and industrial asset. see the gold-silver ratios went sky high. And of course, it's come down at times, and it's been all over the place. Right now, we're sitting around 85-1. You can also look at this as, guesstimating the silver price, although it's probably not a real accurate way to do it. But if you cut this in half, and you saw that for half the time, the silver price probably averaged $200 an ounce in constant dollars. So we're taking apples to apples. And then halfway through, it might have averaged, take a number, 20. So 220 is 220 divided by 2 is 110. So that would be an average price over 700 years, 800 years. And that's a pretty long duration. And of course, that 110, using the inflation calculator, I just showed you, would actually have to be almost doubled, or 200 an ounce. Is that out of the question? I doubt it. Are we going to get there? Time will tell. First, we have to get to 100. However, if you haven't seen it, this is on Kitco News a few days back. I posted on my Twitter feed. This is from stalwart in the industry. This is from the Chief Executive Officer, Phillips Baker, from Hecla Mining, talking to Matt Watson, one of the most detailed analysts I know in the resource sector. He does a lot more than silver. He does all the metals, all the exotics. He does battery metals. He's quite knowledgeable. He's quite a studied individual. Anyway, this is an interview, and solar demand continue to push silver prices higher. This is when markets could see $100 an ounce for Phillips Baker, and there's lots of reasons. So you could certainly take a look at this weekend. I can't see any scenario where it's going to drop. Speaking about silver here, the demand just seems to be built in as far as I could tell, Watson concluded. Photovoltaics are the central bank of silver, Baker surmised. You have this base of demand that's going to continue to push the silver price. I will conclude with the Silver Sunrise, silversunrise.tv. This is the landing page, and you can read the synopsis here, but it really delves into the stress, fear, and control that money exerts over our lives. And of course, despite its essential role in society, many feel enslaved by money's grip. Silver Sunrise explores the emotional and mental toll money takes on individuals and society, but spares the complex economic jargon. So we're well along. The script's done, as I've said before, and starting to gather more of the interviews. We plan to have all the interviews done by the end of the summer, and then the long process of editing takes place. And that's where that's the hardest part, something well outside of my realm, but this is where you really make or break a film, especially a documentary. So for something to look forward to, something I'm certainly putting a lot of time and effort into. And I'll leave it there. This is David Morgan of themorganreport.com, signing out with my weekly perspective.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.